When we talk about climate change, our minds usually go straight to the cost, right? But what if I told you the real story, the one that's just starting to unfold, isn't about the cost at all, but about a massive trillion-dollar opportunity? Okay, let's get into this, because adapting to our changing climate is very quickly becoming one of the biggest new investment sectors on the entire planet. So to really get the opportunity here, you first have to understand just how big the problem has become. In 2024, the U.S. was hit by 27 separate climate disasters that each caused over $1 billion in damage. I mean, think about that for a second. That is triple the annual average we've seen over the last 40 years. The pace is picking up, and fast. And the financial toll? It's just staggering. In just the first 6 months of 2025, the global economy lost over $162 billion to climate-related catastrophes. And look, these aren't just numbers on a spreadsheet. They represent real businesses shattered, homes destroyed, and lives turned completely upside down. So when you see numbers that big, you know something's got to change. And that's exactly what we're seeing, a huge shift in how the market thinks and acts. The world is finally waking up to the financial reality of physical climate risk. Now, it's super important we're all on the same page about what climate resilience actually means. This is totally different from mitigation, which is all about cutting emissions. Resilience, or adaptation, is about protecting ourselves from the climate hazards that are already here and are getting worse. It's about building a world that can actually withstand the storm. And believe me, this isn't just some buzzword floating around in academic circles anymore. An analysis of what top companies in the US and Europe are saying publicly shows that the language of resilience is now a major topic in the boardroom. That's a 55% jump in just a few years. It tells you this has gone from a kind of niche topic to a major business concern. And it's not just talk either. You can see it clear as day in the data. This chart shows the adoption of what are called fortified building standards, basically a way to make houses tougher against big storms. The number of these designations has literally doubled in just 5 years. People are actively spending real money to protect their biggest assets. All right, so the need is obviously there. The market is starting to react. But, and this is the real kicker, while the need for investment is enormous, private money is lagging way, way behind. We're looking at a massive funding gap. And this is where you really see that gap in black and white. In 2024, an incredible 89% of all the money for climate resilience came from public and philanthropic sources. That means the entire private sector, banks, VCs, corporations, they're only kicking in a tiny 11%. So let's put that into perspective, because it gets even crazier. When you compare it to the money going into decarbonization, wow, less than $8 billion has been raised for funds dedicated to resilience. At the same time, over $650 billion has been raised for decarbonization. I mean, they're not even playing the same sport. But here's where the whole story flips on its head. This is the inflection point. Because while the current investment is small, the estimated potential market for private capital in these resilience technologies is projected to hit $1 trillion by 2030. That's the incredible opportunity hiding behind that funding gap. So you're probably wondering, what does a trillion-dollar market for resilience even look like? Like, where is all that money supposed to go? Well, it's basically a whole toolbox of solutions, broken down into 10 key technology categories that are ready for investment today. And here they are. It's the whole shebang. Stuff like making our buildings and power grids tougher, making our supply chains and agriculture more robust, and getting way smarter about predicting disasters before they happen. It also includes new financial tools, like new kinds of insurance, that help move risk away from the people who are most vulnerable. And this chart is a great job of breaking down that trillion-dollar pie. The biggest slice, by far, is in resilient buildings. Think stronger materials, smarter cooling systems, backup power. That alone is a potential $400 to $500 billion market. And right behind it are huge opportunities in hardening our electric grid and making our farms more resilient. And I really want to stress this point. We are not talking about some far-off sci-fi tech here. These are real, practical solutions we have today. Things like smart grids that can actually reroute power to prevent a blackout during a heat wave, or advanced irrigation that helps farmers grow crops even when there's a drought. Okay, let's recap. We've got a huge problem. We've got a trillion-dollar market full of solutions, and we've got this giant funding gap in the middle. So what gives? How do we connect the dots and unlock all that private money that's just sitting on the sidelines?
Well, the analysis lays out a pretty clear three-step roadmap to get there. To get investors really on board, we first need to actually quantify the return, then create much better incentives, and finally build up the specialized skills to make it all happen.
First up, you've got to make the business case undeniable. It's not enough to just talk about risk. Investors need to see the cold, hard numbers. You have to show them the ROI on building a seawall, for instance. And that's tricky, right? You're basically asking them to value a disaster that never happened because of their investment. That's a huge shift in thinking for the market. Next, you have to fix the incentives. Right now, we're mostly reactive. We spend money after a disaster hits. We need to flip that. We need financial products that reward people for being proactive. The insurance example is perfect. If you install a storm-proof roof, your premium goes down. Simple. It just makes financial sense to be prepared. And finally, step 3 is all about building up the expertise. Let's be real, this is a totally new asset class. Figuring out the value of a wildfire prediction algorithm is a whole different ballgame than valuing a software company. So we need specialized funds, and we need analysts who really get this stuff. People who can actually underwrite these really complex but really important projects. And really, all of this brings us to the bottom line. This isn't some problem for the future or some far-off opportunity. The source material says it perfectly. The opportunity for investors in climate resilience is here today. This market is taking shape right now, as we speak. So, all of this leaves us with one final and pretty heavy question. The technology to protect ourselves is here. The private capital is out there, waiting for the right signals. The only real question left is, will we be smart enough to invest in resilience before the next catastrophe, or will we wait until after?